Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Tuesday, September 15th, 2020. What I'll do is start out with a very, very brief update on the broad market. There's not a whole lot new to report. Since the post I made this morning, I put this chart up there, which pretty much contains all the significant developments that have been highlighted over the last couple of weeks. And so not much to update. We'll start there and then roll into, I do want to do an update on gold, silver, and the US dollar. Haven't done one there in a while. And then continue to see some bullish developments in the coal stocks, at least one other one breaking out today. And so I'll hit on those real quickly. So it'll be a relatively brief video, that I do promise. All right, so starting out here, we have just to kind of summarize, especially for those just catching up. We had the sell signal back here. What was that? September 2nd or 3rd, I think, right there. Boom, that was it. And that triggered, that was a start, or at least the objective entry on this 11% drop in the NASDAQ 100. Biggest drop in many months. Very profitable, for a quick trend trade, swing trade, that is, actually. Hit that T4. We had the 4 target here, and I had and still have this potential 5th target zone. Initially, before the breakdown, I had this as my final target, and somebody asked for any additional downside targets, so I did that here. Now we came full circle recently. What I mean by that is we had negative divergence at the high. That was the technical posture, if you will, and a very well-defined short-term uptrend line, and then about as good as it gets. Nice gap down below, followed by impulsive selling. Everything you want to see to confirm a sell signal, and it played out. And when we hit that 4th target, we did it. Not only are the odds of a reaction upon the initial tag each target likely, that's why multiple targets are listed, but in this case we had some pretty strong and clear positive divergences on all the index, both the futures and the ETFs, both QQQ as well as SPY, IWM, etc. And then yesterday, boom, there was our buy signal on the breakout, the gap up above the bullish falling wedge pattern, and so far that's so that's a near-term buy signal. Where do we go from here? I've laid out potential bounce targets. First target up there about the 50% Fibonacci retracement, 286.32 give or take. That's price resistance. Should this continue to go? Right now it looks pretty good. The rally has got some legs at this point in time. Anything can happen. So, if we get some kind of reversal, you might want to it's a little early to say with confidence about this being a valid uptrend line, but I'll put it there. So something to watch in a break of that trend line, especially if it continues to form, with reactions, candles off that level, then that's one to watch that could trigger either just a near-term pullback, nothing goes straight up forever, or maybe that's it. And as I said, by all accounts, bullish falling wedge, 60-minute chart, that's usually in a primary trend, especially a strong uptrend like we're coming off of. That is usually the catalyst after a correction for the road to new highs and beyond. So if we don't get that, and I'm open to all scenarios and still leaning that way, if we do not get a move that takes out the previous highs, especially if we undercut these recent lows, I think we go on down and hit that potential 5th target and possibly more. But until then, like I like to say, support is support until unless broken, and that's the support level we're watching. That's probably the most important support level in the market right now, in my opinion. In the NASDAQ 100 futures, it was a double bottom low, and we don't see it as clearly because we're not showing the pre-market trades. QQQ did hit this level, that T4 level in pre-market. So you effectively have 2 successful defenses of that level. We're at the 38.2 fib now. So that's the level to watch today. We already had a rally up there. Here's my Fibonacci numbers. These are the percentage of the retracement of this move down. So when you get to 50%, it means we've retraced half of that 11% drop. So we're at the 32.8 fib. We already checked it once and we're rejected. We're checking it again. And so that's also price resistance, because you have a previous reaction high there. So this is a level to watch. The solid break above that should open the door to that next target up there, and potentially, expect a reaction maybe up here to back test the trend line, and or that trend line is going to come in. Depending on if and when we get there, it can come in right around this second target zone right here. That was T1 target zone on the way down. Remember, first target zone, we blasted right on through it because we had such an impulsive breakdown. And again, so those are the potential targets. And again, box it in there, my bounce target zone. Anything much more than that, I believe, would be pretty bullish. You'll start taking back the, the breakdown, of course, the Tesla stock split, Apple, and all that. And I want to talk on that real quick. So before I move on, and again, I did a comprehensive post this morning with this chart. Here's what I'm watching: that PPO signal line right there, the 9 EMA, will the PPO cross back above the white line there? Will cross back above. It's moved slightly above that negative 0.49 level. That tends to do a good job of defining trends. At different points in the market, quite often I focus on the 0 line, which is just above it, the dotted line. But you can see, for the most part, when that, again, I like the white lines, the last two to cross. When it's above there, the trend is bullish, and when below, it's bearish. And not only that, but when tested from below, that often acts as resistance. So that's it. We're coming up on not a major resistance level, but that 38.2 fib in the previous reaction high. And so, ideally, if this breakout's going to be foiled or not really pan out for what the charts might indicate, this would be an ideal place for us to turn down. So a lot of work to be done. We could just pull back and head back up. So really, again, I'm watching the recent lows there. While we're here, let me just show you one thing real quick. Let me go rifle through these fangs. Something that stood out to me, worth noting. I'm going to go over the top components. For those of you not aware, the top 3 holdings in the NASDAQ 100, which is also QQQ, those are Apple, Amazon, and Microsoft. Collectively, they make up over 1/3, about 34% of the entire performance of the NASDAQ 100. That's how heavily weighted just those top 3 are. So what I've noticed here is they've been relatively weak. Apple, the bounce, it's not even to the 38.2 retracement yet. It hit that level before and got checked, just like QQQ. And like QQQ, it's coming up close on there. But again, a level to watch, previous reaction high. And then, again, a break of the recent lows. Watch these market leaders, because I promise you this, the market is only going so far without Apple, Amazon, and Microsoft confirming and moving up with it. So it's really all about the break of the recent lows. And if that happens, guess what? Apple's also going to take out this trend line here that comes off the March lows. Pretty significant trend line. So again, levels to watch. Maybe the whole correction's over, maybe not. Way too early to say, because we haven't even, we did retrace the minimum 38.2, but we're still below that right now. So that's what Apple looks like. And I just wanted to point out that relatively speaking, it's lagging behind a little bit. Amazon as well. Do I have fibs for you? Let's see. I thought I put them up here. Start out, just show you we're below trend. I have a couple different trend lines on Amazon, but just about everyone, that would be the one that counts. Breakdown, and we're below trend after putting in a divergent high. By the way, I'm on the 60-minute charts here. Let's just flip over here and throw up some fibs real quick, just to kind of give you an idea of the the vigor of the bounce. And there it is. So Amazon, this is our most recent low. That first bounce was before the downtrend or the correction so far ended, and we're barely there. Look at this. Amazon is, I'd have to add in the, there's another fib. There's different fib levels here. I just put up the main ones, but the 23.6, less than 0.25% retracement. We haven't even hit that yet on Amazon. So again, something worth noting, that they're not buying the market leaders. These are the stocks that since the March lows, and even really before that, before heading into the highs, we're doing most of the heavy lifting on the market, and it says something that the institutions or individuals aren't stepping in and buying these stocks very aggressively on the dip. Tesla, they are buying, but Tesla's not going to move the needle. It's a crowd favorite, but it's not weighted nearly as heavy. So that's why I just wanted to go on these 3. And then finally, Microsoft, again, because these 3 collectively account for over 1/3 of the performance there. Let's see, on Microsoft, let me just turn off all the lines, go to a different board, and just show you what we've retraced. Take that high to low on the drop, and you can see not even close to the 38.2. We're probably down around the 23.6% retracement right there. There it is. That's where we're at. So I wanted to point that out. So Is it a red flag? No. Yellow flag? Yeah, maybe. It's just something worth monitoring, and we'll watch this and see if these guys start to, have the buyers come back in. And if not, that's usually not a good sign for the market. Okay, moving on to gold. A couple months back, you can go back before that, about 3 months back, I, closed out the gold long trade and most of my gold, some precious metals positions, because we're coming up on this major reaction high. It was our previous bull market high, blow off top in gold back in 2011. Those reaction highs are always, usually going to prove to be a, significant level traders going to watch. And you had that coupled with divergences and other things, overbought conditions. It just said, look, the risk reward in gold is not very attractive. Odds for correction are likely. And we did. We had a correction, but more so, it's been a correction in time than in price. I mean, there was from the highs, the drop, even it was initially pretty sharp. It was about 8%. But you can see in bigger picture, and again, we're on a weekly chart here. If nothing else, it's been a dead money trade. So is the correction in gold over? Possible. I remain longer term bullish. I've maintained that stance all along, but intermediate term, still leaning towards a little more downside. Let me show you one thing on this weekly chart. What I'm going to put up here is a PPO histogram. So the PPO is this line up top here. Let me make sure you can see where I'm at. This is your PPO. The histogram is a visual representation of the differential between the two lines. In other words, you have your PPO line in blue here, and then in white is the signal line. And when the blue line crosses above or below, that's a bearish or bullish PPO crossover, and it often can trigger at least a near-term trend change. It's showing you momentum is waning or turning in this case, because the PPO was headed up and it's moving down. Now, the histogram, what I like about that is you can see when that crossover occurs. You can also anticipate crossovers. There's no guarantee you're going to get it. Sometimes it looks like you're going to cross and lines bounce, but I like to use what I call these hills. When you see clean separation after an uptrend, and these are, there's a hill, a green hill, there's a red hill right there. And so when you look at this, and I'll do this way, when you have an uptrend and then you get the crossover, quite often you get corrections afterwards. That one wasn't very much, but at least it put a pause. There was a little correction there. We've had a pretty big green hill all along here, and we're very close to crossing over. I just showed you the lines are your PPO lines pointed down. Here was another crossover, and there was a correction from that point. It wasn't huge, but there was a correction. Here's one, and the correction was actually very large, even bigger than what we had right now. That's probably 10% or more right there. So again, you go back in time and you look for these crossovers, and they quite often, again, it's not a standalone thing, but you quite often, when you get these hills and then you get the crossovers, that's when corrections come. So it's worth noting that's where we're at now. And again, as I just mentioned a second ago, sometimes it appears you're going to get the crossover, but boom, the lines bounce, the PPO line, and we don't get the crossover. But one thing you can kind of just eyeball, these are kind of the trends, if you will, the swing trends within a bullish trend. The gold's been in a bull market, and these are your uptrends right here, and you can see they last about so long before you get a correction. Some are longer than others. Sometimes you get these little whipsaws, but usually that's about the extent of it, and then you get a tradable correction. Some are bigger than others, and this one, if you count this as a whipsaw, it was a very brief, it was a sell signal there. You got the crossover right there, and there was still more downside, but we recovered very quickly. So you can view it either this is the current hill or this whole thing right there. And like I said, I've been favoring a pullback to at least test this trend line here, a little more downside. Not hell bent on it, but that's still the way I'm leaning right now. There might be a little more downside coming up in gold. And part of my analysis, it wasn't just gold running into resistance. I mean, that's a big part of it, but I'm still in a weekly time frame. We had the euro-US dollar pair. The euro is the biggest component of the US dollar. It's 60, it's almost 2/3 of the dollar index. So really the euro and the dollar are in mirrors to each other because of their weighting. And that's it. The euro, just like gold ran into resistance, so did the euro. This is major resistance now. Just as I remain longer term bullish on gold. I remain longer term bullish on the euro. It's just intermediate term. That's what I'm concerned about. You can see what's happened. This is the history of the euro US dollar pair. And by the way, when you're looking at this chart, because gold is inversely correlated to the dollar, this is showing you the euro rising against the dollar. So gold is going to track this chart. When this is going up, gold goes up. So what I'm looking at here is we've had, again, the history only populates at this point, but you can see what's happened every time in the past we've rallied up to this trend line. Okay, it doesn't take a an expert in charting to say, wow, well, every time the euro hit that trend line it was rejected. Now, no trend lasts forever. Expect there be a breakout above this downtrend line. The big question is, are we going to have a pullback first? And I think that's the most likely scenario. And if we make a solid pop above and we put several green weekly candles up here, put that trend line in the hindsight, that won't be the case. But as of now, even if we are going to go on to break out above it sooner or later, which I think we will, we have two things. We still have the euro US dollar at resistance. Again, I pointed out a couple months ago, and that's 1, 2, 3, 4. I mean, we're talking, these are weekly candles, so that's 2 months of trading. That trend line has stopped at cold, and we have an uptrend line as well. So any rejection here, we've been consolidating here, any downside will also trigger a sell signal on a break of this, and it will, if it's impulsive, it will mean a rejection after several weeks of testing and attempting to get through there. And you can see how beautiful this trend line is working. Even on a weekly basis, we've had a couple intra-week pops, but I would say, when you're trading, you want to see a candle close on the time frame you're trading. If you're on a 60-minute chart or a 15-minute chart, you want to see a breakout. You want to see that 60-minute or 15-minute candle close above your breakout point, trend line, whatever it is. On a weekly chart, you have to wait to the end of the week because you can get these intra-week whipsaws and only to see the candles close back below. And so that's where we're at. So we're kind of pinched, if you will, between resistance, the downtrend line, and support right there, the uptrend line. And so respect whichever way it goes. Again, I'm leaning towards a breakdown and maybe break out later on, but just near term, if we do get this breakdown, that should put pressure on gold. So that's what it looks like on the euro US dollar pair. DX, or dollar futures, if we zoom down from this weekly chart here, let me find my DX 60-minute chart right here. Okay, so these are US dollar futures. So this is almost a mirror, a flip. We're flipping that other chart upside down now, because this is the dollar. So when this is going up, the dollar is climbing instead of falling. That's it. Bigger picture is we broke out. We had a nice downtrend line. We had positive divergence there. This is all bullish, at least on this 60-minute time frame, saying the dollar was likely to bounce, and it did. It's bounced so far. What happened kind of on a more micro level, we set up this small bearish rising wedge right here, it was pointed out recently, and then broke down below it. But so far, the move down has been pretty muted, relatively contained. So maybe that's it. And so if you look at it this way, bearish rising wedge, bullish falling wedge, but which one's bigger? This one's much, much bigger. So, in the longer term, this would indicate first wave up, corrective wave, and another leg up to come. So I'm still waiting for a breakout above 93,862, give or take, for the next buy signal, and it's pretty thin between there. By thin, I mean not a lot of trades, not a lot of resistance. So if we get up here and then ultimately break out, I think it might be a pretty swift run up here, relatively swift, up to that 675. If we never get there and the dollar just starts going lower at this point, there'll be divergence for a little while. We'll just have to assess the charts as we go. I just wanted to point out that I'm still leaning towards this scenario, dollar up in the near to intermediate term. I'm talking next, let's say next few weeks at least, somewhere give or take in there, and that, if so, it'll put additional pressure on gold. But also remember, gold's been mostly a dead money trade while it's consolidating at that long-term resistance. We've had, the 60-minute chart. This is GC gold futures, broke down here, regained the trend line. Again, it's just a sloppy trade right now, so I don't want to spend too much more time on it, but I do like to update that. I know a lot of you like to trade gold. We may even have a little symmetrical triangle pattern going here as well. So any solid upside break would be bullish and a downside break would be bearish, especially a break below that 1911 support, and that would open the door for a move down to either of these two potential targets. Okay, so gold has been like trying to squeeze water from a rock or blood from a stone to try to make profits lately with that kind of relatively tight, choppy trading range. Dollar breaking out, but really not, rocketing up or doing much. Everything I just went over. Stock market, there was definitely a profitable, short trade to be made recently. Even, a profitable, long trade just to game the bounce that we're in now, and that may have a little more traction. So, at this point, maybe continue to trail stops up if you did cover it, reverse or go long on or after T4 or on the breakout yesterday. But again, much easier money, bigger profits have been made in these coal stocks lately. So I just want to do another update, and which I'll continue to update as long as I see constructive charts and bullish developments. This is HCC. Nothing big, but continuing to move up since the breakout and back test. Again, these are all targets, these mark levels overhead. So nothing big there today. This one I wanted to mention, I followed up yesterday, Arch Coal or Arch Resources following through on the breakout, up another almost 2% today after yesterday's green candle in the breakout. So looking good up to 50.63 unless something comes in and checks the coal sector or this particular stock. So there's one that just triggered our second objective entry, actually third, I'm sorry. There was a breakout here, back test. These are all objective entries. Breakout number 2 above the 35 level, breakout number 3. So it works like that. Those are your objective entry points. If it pulled back to 41, that would be an objective add-on or entry. Depends, again, stops all depends on if you've been scaling into these as I have, and selectively or strategically adding to those positions, such as breakouts. I'm going to get to one today that broke out at a price alert this morning. ARLP, nothing right now. It needs to take back that trend line. I think it'll do it. I think even the ones without the best looking charts will get dragged up because birds of a feather flock together. So you're seeing momentum in the sector. So a lot of these will be most likely get dragged up with the others, so to speak. SXC, as mentioned, breakout being checked on that 364 resistance. Hit trendline support yesterday, where I mentioned as an objective add-on or entry, up about 4.6% today. So nothing major. Especially considering the volatility in these guys. You don't want to put a huge position like something you might put into a Procter & Gamble or an Apple or something like that. But a lot of profit potential on this one if it breaks out. I think above that 364 level. It already broke out above the trend line. BTU following through again, up 6.5% today, coming up to the second trend line. Remember, we already had a breakout here above this minor trend line, bullish falling wedge. Next objective buy entry on a breakout above that. 441 to 523 is are the first two targets. And then if the sector continues to run, maybe all the way up here to 867. NC, this one looks poised to pop. I mean, the PPO is starting to curl up. This one, usually I'll wait for breakout sometime. I nibbled on this one, took a starter today because I think, again, I'm seeing the upside momentum in the sector, more and more stocks breaking out. And these are relatively thinly, some of these are relatively thinly traded. So if you can put a limit order and try to buy it cheap into, again, a starter position. So if it goes down much, I can give it a pretty wide stop. I'll only add to a stock like this now on strength. If this one goes down, I'm not going to scale in because it's at support. There's a long-term support level about $20, and there's your downtrend line. So it really needs to move up. So if it goes down, I'll be more concerned about where to cut the plug on that starter position. If it breaks out, maybe it gives an orderly breakout and I can get in at a decent price. But if it moves up big, gaps up 8%, then I can add to it, and I'm averaging down. I already have a starter position, so sometimes I feel a little more comfortable than chasing a stock that's up 8 or 10% on a strong breakout. when I already have a position that's profitable. So if the breakout kind of reverses and maybe you get a little pullback, you're not immediately underwater, at least on the entire lot, the entire position. So that's NC, yet to break out, but close. NRP, same story, needs to break out above the trend line, 1194. And CEIX, that one broke out today, broke out above 495. That's a buy signal. That was resistance. Remember, we put in this divergent low recently. We were overbought, and 495, it broke out. That should open the door to move up to around that $6 level, the down price resistance plus the downtrend line just above. METC still just waiting the next buy signal, pop above 317. And I swear there was one. Oh, the next one up after this is the one I had the buy signal on today. This is CCR, yet to trigger buy signal, still below trend. Watching that trend line. And then CTRA, this one broke out today, and it was a breakout. It didn't gap above. It was nice and orderly. So if you had a price alert, and I had one trigger this morning, you can see what I'm showing you here is a 1-minute chart that I toggled over. That's yesterday's close. So this is the open here, this yellow line, and it's just steadily moved higher all day, given plenty of opportunity to enter the breakout and not have to chase it. At this point, the stock is up 25%. So you would have caught most of that 25% today on the breakout, after the breakout above 494. And so we're coming up on that first target, 660. Anything is possible, but I don't see a whole lot stopping it right now. Getting some nice momentum. Volume's okay. It's not great, but it's above average volume today. I can see that on the volume bars. And so that's the one I wanted to point out. And that's it. These are others I'm following. Not the strongest chart, not one of my favorite. AREC. And then H and RG. I'm just trying to be consistent on going through the basket that I've highlighted recently. That's it. H and RC starting to crack above the trend line. Not very impulsive. I mean, it's decent in price move, up 4.5%. Although that candle, when you look at it, isn't. You can hardly tell it's above the trend line right there, or really right on it, depending on how I zoom this chart and how I, fudge this trend line. I can put it nice and tight like that. I think that's probably the best fit, or I can come off the highs, but either way, close to breaking out, and big divergences down there. So the potential, if this sector can continue to get traction, you're talking 40, 50, 60% to that trend line, and again, who knows? These stocks easily can run 100% or more when they get the momentum and the traction going. All right, we'll wrap it up here. I don't see a whole lot else that stands out. I've been glancing at bonds, and again, the bond market's just completely distorted right now with the Fed backing. I can't trust any of the signals that you're getting, and it's not really giving us any clear signals on treasuries or corporate bonds right now. Again, with the Fed, artificially backstopping that market. So. Other than that, commodities, as I mentioned, a lot of them recently hit resistance levels, final targets like JO. So a lot of those are poised to take a breather. This was coffee. This was an official trade, entered back here on the breakout or after the breakout. First, second target, and that was that potential third target hit, and that's how it works. I mean, you hit the resistance, especially a final target, and then on top of that, take out a downtrend line, like or uptrend line, like I was talking on the euro. And once that uptrend line was taken out, that was it. So pretty well, nothing big today, but yesterday was down pretty big. Now, with this correction, I'm longer term bullish on these commodities. Still cautiously. A lot of them are not clearly out of a bear market yet. Some are. A lot look to have bottoming potential. But what I'm looking at is, after this correction, or these corrections on some of these, going back into these, and there's the way it works is in reverse. T2 was resistance on the way up. There's a resistance level, and resistance once broken becomes support. So there's your objective entry on coffee, and you can see they also had divergence here at the high, negative divergence. So which is common when these at the end of these runs. So that's it. So we'll let this one run its course. May have a little more to go, and some others. I don't want to get. I told you guys I was going to keep this video short, so I'm going to cap it here. We'll do commodities in another update. I did do one. I believe I did an update on those last week. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.